Now, there has been a marginal increase in demand for some bonds ahead of the release of June inflation numbers later this week. And to review the fixed income market, I'm now joined by Jide Nwangogo, investment researcher at Dunlorry Merrifield. Jide, thank you very much for joining us today. And before we move on to the fixed income market, let's talk a bit about the Naira. The Naira, fairly stable these days. Today we saw the central bank sell $300 million. And that has, if you like, is a reflection of the stability we're seeing. Not so long ago, we did see them sell $500 million. Do you get the sense that the Naira has stabilized right now, given where oil prices are closer to $108 per barrel?
Thanks, Wale, for having me. Today, the Naira closed on the interbank market at 161.5 Naira per dollar, as against 161.68 as it closed on Friday. We saw the CBN today selling about 300 million worth of dollars to the at the WDAS auction today, which is a part of the CBN's initiative to defend the Naira. For the past 2 weeks, we've actually seen the Naira closing at the interbank within the 161 band. And we could say that between January and date, the Naira has been at a stable 155.7 or plus or minus at the CBN auction, while it's been fluctuating between 158 and 161 at the interbank. That shows a big margin when you look at it, which shows that there is a lot of pressure on the Naira, which has necessitated CBN to be selling more at the auctions. At times they go ahead as much as selling about 500 to 800 million dollars at every week.
Of course, that has come down a little bit, like I mentioned, to $300 million today. So do you get the sense that we're in a good place right now? The Naira is stable, at least going by what we're seeing in terms of the central bank's activity?
Well, for today, you cannot really say the Naira is stable from what they sold today, because you can see that it's not sustainable, given the fact that we stand the risk of oil price volatility at the international oil markets.
Right, of course. So the oil price will always be key in addressing, or should I say forecasting, where the Naira is likely to go. But let's move on to the fixed income market, starting with the OMO auction. And I get the sense that that will be key in terms of giving direction to the market going forward. We've seen very little activity recently. Do you anticipate that this is going to change?
Yeah, like today we saw the CBN coming back to issue OMO bills. The two tenors were offered today. We saw the 70-day tenor, where they offered about 40 billion. And we had offered about 30 billion, and it had a very low subscription levels, which ended up CBN selling only 6 billion at 12.5%. They equally issued, they equally offered the 171-day OMO bills, where they offered about 40 billion worth of OMO bills and sold 50 at 13.15%. So going forward, we still expect them, because the market looks a kind of liquid. The sales of OMO bills today actually slightly affected the treasury bills market, because the investors looked at going to the OMO bills market to buy from the primary markets, other than participating much on the secondary market.
Right, so the whole interest in fixed income government securities just reflects the depth of the market. It's really where a lot of people want to be. But let's move on to the bond auction that we're expecting this week. I want to get your thoughts on that. Of course, this is what we have on the calendar. And recently, we've seen the Debt Management Office sell a lot less bonds. And do you anticipate that this is going to be the trend going forward? And speaking specifically about this auction, what are your broad expectations for yields?
Yeah, during this week's auction, we can see that the two bonds that are going to be offered during the Wednesday's auction are not actively trading in the market. So we don't really see it affecting the market much. As we can see today, we saw a kind of demand coming from the PFAs, and a little demand equally coming from the offshore investors. We see that to the fact that the PFAs wants to cover up from the secondary market other than going to buy those bonds that are not actively trading in the market during the auction. However, the market is expected to remain flat pending the outcome of the auction on Wednesday, after which, going forward, the market will follow the trend of the outcome of the auction.
All right, let's talk very briefly about the T-bill market and how you expect this is likely to play out. Of course, the bond auction will be the major focus in the fixed income market this week. But what about the T-bill market? What are your broad expectations for yields there?
Well, equally coming to the T-bills market, like I said earlier on, there are speculations that the inflation figures for the month of June, which is due for release tomorrow morning or latest on Wednesday, is going to come out lower than what it was in the month of May. So we actually expect the market to remain as it is. Now, we don't see much change in the trend of the current trend of the market, as there is nothing much to actually drive the market too far.